Hi everyone, I'm Nikki Pike and I'm a mortgage broker with TMG, the Mortgage Group, and I wanted to do something a little bit different today. I have brought in one of my lenders to talk to us about a reverse mortgage. So I would like to introduce you to Tim Wachter, who is the Western Sales Manager with Equitable Bank. Hi Tim.
Hi Nikki.
Thanks.
Hi everyone.
Thanks for joining us today. And like I said, we want to talk about reverse mortgages. Can you start with telling us what a reverse mortgage is?
Sure. A reverse mortgage is exactly what it sounds like. It's a reverse mortgage, but there's a lot of different things about it. First of all, you do not make any payments on a reverse mortgage. It does collect interest on it, and you have 6 months to 5-year terms on the reverse mortgage. But the big thing here is that the client is not making any payments at all, and there's no tax implications on it either. And the client gets to keep it in his own name. So that's essentially what a reverse mortgage is. It's a niche product made for people that really need it. So I have a lot of questions for you, I'll be honest. Sure.
I want to start with who would be the perfect client?
That's a great question. Who'd be the candidate for this? We're finding through demographics, the baby boomers are becoming the highest demographics in the next 5 to 10 years. And what's happening, which is really interesting, there's stats out there that said 20 to 30% of people that are retired, are going to be retired in the next 5 years, do not have enough savings, enough investments to take them through their entire retirement age. So what's happening right now is people are on CPP, old age pension, and they worked really hard and got their house paid off. It's free and clear. But what's happening right now, Nikki, is that people are what we call house poor. So they're barely making their utilities, their property tax, and they're not able to sustain the lifestyle that they want, and they want to stay in their house.
Yeah.
So this is a perfect solution for people that want to stay in their house because, again, there is no payments whatsoever, and there's no tax implications whatsoever. So that makes it the perfect storm that people that are retired and they need, say, $200,000 or $300,000, we can access that money for them. And we can pay it in a different ways. They can take a lump sum of $200,000, or we can even have it where they take monthly payments, quarterly payments, or even yearly payments.
Wow.
So it works out really well for that person that really wants to stay in their house as long as possible and sustain that lifestyle that they're accustomed to.
So there's a lot of different ways that people can use this.
Yes.
So you mentioned someone that is living off of their OAS and CPP and free and clear house. What about people that have a lot of money in investments and maybe want to keep that money there and have a free and clear house? That's
a great scenario too, is that you want to make sure that the interest that you're collecting on the investment sustains that way, and then you have access to even more money that they can invest and keep you in the lifestyle that you're accustomed to. But what I'm seeing a lot now is, and you know this, Nikki, as a mortgage broker, is that more and more people are going to Bank of Grandma and Grandpa, Bank of Mom and Dad for the down payment of a house. So what's happening here is a lot of people that have the house free and clear, instead of waiting until they pass away, really, they're giving them the down payment to their niece, nephew, or to the kids right now so they can get into a house right now. And the nice thing, like I said about it, is that there is no payment. And taking it a step further, people there's not a credit criteria for people to get a reverse mortgage.
So it's easy for people to qualify for.
Yes, because with the banks on a normal mortgage, as you know, Nikki, is that you have what is called a GDS, TDS component, gross debt service and total debt service, that all the lenders use, but on a reverse mortgage, we don't at all.
Okay. So what Tim's talking about there is when we're looking at a conventional type mortgage, we're looking at income versus debt.
Yes.
So on the reverse mortgage with Equitable Bank, you're not looking at the income versus the debt. So you're looking at the house, really.
That's right. The property. That's the biggest thing is we'll need an appraisal, of course, but the biggest thing is the house. And another myth out there, we'll talk about
questions.
It. Yeah.
What are the myths?
Like a lot of myths people think, oh my God, I'm going to get a reverse mortgage. That's going to eat up all the equity in their house, and I'm going to have nothing to give my kids or anything. That's not the case. The max we go on a reverse mortgage is 40% of the value of your house. That's the max we could ever give anybody.
Okay.
So for them to eat up that 60% equity would be pretty impossible, because you got to take into consideration that houses will appreciate. So it'd be a near housing collapse in the world for that to happen, really. So that's a big myth, that it's going to eat up the equity. All it's going to do is 2 or 3 things right for the right client. It's going to For people that want to stay in their house as long as possible, it enables them to do that because they can access the money and they can live the lifestyle that they want. When they finally retire, they want to travel, they want to do these things.
And they've earned it.
They should.
They should
do
those things.
And we've seen it so many times where they worked hard, the house is free and clear, but what I call their house poor. Because
it's a different house poor than we think of a first-time home buyer. Yes. Then we're trying to keep it so that their payments aren't too big. So that their house
That's right.
This is a different house poor where their income is this.
That's right.
And sometimes we can just free up and give them more income.
Yeah. And it makes a big difference because you look at people 55 years and older, if they're on pension, it's really, really difficult for them to get any kind of financing with the bank because they just have pension income and they don't meet the guidelines. Yeah. So this, again, you don't have to qualify at all. We look at the credit, and it's not a credit criteria thing. It's not a debt service. It's just really, do they have the equity in the house? And if they have the equity in the house, we can give them the money for it. So that's a big thing right now.
So you mentioned 55. Is that the minimum age? Okay, so 55 plus? 55
plus, and it goes by the age with us. Like, say somebody's 70, I can give them 28% of the value of their house. And the older you are, the more value I can give you. Somebody that's 83 years and older, I can give up, which my maximum is 40%.
40% of the value.
On it. And there's safety. If all of a sudden they came into an inheritance, they want to pay off the mortgage, they can. After 10 years, there is no payout penalty. And the first year, it's like 5 months is the payout penalty. And the second year is 4 months. And 3 to 10 years, it's 3 months. So they can get out of it. It's not like, oh my God, I'm fixed in this forever on it. And, and people talk about, well, what happens if the individual passes away?
Yes.
If they pass away, there is no payout penalty whatsoever.
Okay.
It's just like any other mortgage. You pass away, then you basically, the people that inherit your house either have to get a mortgage and pay us off, or they sell the house and pay us off. Simple as that.
So we've talked about a couple people that this would work really well for.
Yes.
So someone that is living off of their OAS and CPP and needs to free up some money. Maybe some people that want to preserve their investments and find a different source of cash flow that has no tax implications. Maybe someone that wants to gift some money to a child, a niece, a nephew, whatever it is, grandchild. There's a few other scenarios that I think it can help people as well. So what about someone that maybe they are aging? So maybe that 83-year-old you were talking about. So they're 83 and they need some help to maintain and manage their day-to-day care.
Yes.
Can this be used to bring in home care?
Oh, for sure.
Put them in their home
for sure. Like what I'm saying is the money that we give them, we don't say that, okay, you have to use this money for certain things. They can use that money for whatever they want. And I agree with you. Most people want to stay in their home as long as possible.
Definitely.
And it's not even for the elderly that need, it is for the elderly that need that care. Instead of going to assisted living facility, they can get this money and have somebody come in. And they'd rather do that than go sell their house and go to assisted living. By far on it.
Well, and it's proven that keeping seniors in their home longer keeps them healthier longer.
That's right.
You're actually helping people stay healthy.
Yeah, and it's funny because you say that a lot of the reverse mortgages that we've done are simply for people that aren't that old. They're 60 to 75, but they're still young and vibrant, and they want to do a lot of things. And their house is their whole social gathering for their kids, everything. So they want to stay in their house as long as possible and maintain their lifestyle that they want and that they do deserve. So that's what's happening more and more. We're accessing that. And again, there's no payments at all on this. And that's the big difference here because seniors, they get line of credits. And they go, okay, they get a line of credit, that's fine. But there's still interest payments on that. And when that line of credit comes due, they have to requalify to get another line of credit a lot of times. With us, there's no qualifications. This is a long-term solution. So say somebody takes a 5-year term on the reverse mortgage. After 5 years, it's just a rate reset. Simple as that. And whatever the rate is, then we go for another 5 years and take it from there.
So with the reverse mortgage, another myth. So you mentioned the one about the main concern is equity being eroded in the house. Which I know there are statistics that you can show that show that it's not actually the case.
It doesn't happen.
What about that a reverse mortgage is expensive?
No, that's another myth right now. The reverse mortgages rates are higher than a normal mortgage, but they range anywhere. Like right now, our best rate is like 5.85. For example, which isn't that bad compared to the rates that are out there. So it's not like a private mortgage where you're looking at 7, 10, 12% interest rates. That's not the case. So again, the rates are decent for what it is. because there's no payments. And even if somebody wants, I'm not saying they're going to do this, you can make lump sums a year on it if you want.
Like extra payments.
Yeah, extra payments. And you can, if you want, just pay the interest off every month. And just have that principal balance.
Okay.
You just keep it at that principal balance if you wanted to. Most people don't.
Yeah.
But there's options out there for it.
I think this is where I'm going to throw a plug in there about using a mortgage broker.
Yes.
It's about knowing your options, understanding your options. So by coming to a broker such as myself that has access to the reverse mortgage with Equitable Bank, we can take a look and see what makes the most sense for you. And even if you have a financial planner, we can bring that financial planner in and bring everyone into the conversation so that we know you're making the right choice.
You're absolutely right, Nikki. And another thing, too, is that we only go through the mortgage broker channel. So you have to go through Nikki to get the products. Just Nikki. That's it. That's it.
No other brokers.
So it's working out really well that there's options for these clients. And like I mentioned before, it is a huge niche now because more and more people, there's going to be more and more baby boomers.
Yes.
And unfortunately, more and more people have not saved up for their entire retirement. So they need access. But the great news is they paid off their house. It's free and clear. And they're sitting on all that equity that they can use to stay in their house, to give to the kids, to travel, to do whatever they want. And it's a great product for the right person.
I agree, and I think that's the reason why we wanted to do this today, is to let people know that it definitely, the baby boomers, they've had their mortgages paid off. That was a huge goal for them.
Yes.
And now exactly that. They're sitting there with this house that's free and clear, but they're not enjoying life anymore.
Exactly.
So.
And what we do, or what Nikki does, is she involves everybody on it. So you're talking to not only the people that want to get the reverse mortgage, maybe you're talking to their kids, to make sure that everybody can understand the whole process here. It's very much like a myth before where it happened, oh my God, you got a reverse mortgage, it's going to eat up all the equity, you don't own the house anymore. That's not the case. That happened a long time ago in the States, and that's where that came from, that myth right now. But reverse mortgages are becoming more and more, how do I say, reliable. They're regulated by the banks. It's a great product to keep that person in the house where they want to be.
So let's talk about that for a quick second. So you mentioned they're regulated. How many banks offer this product? That's
a great question. There's only that I know of was called CHIP at Home Equity Bank, they're called now, and us. So there's only two out there, which is hard to believe. So we're giving CHIP a run for their money. We're doing things a little bit different here. Our rates are a little bit better than theirs. Our payout penalties are better than theirs on it. But it's something that we know in the future it's becoming more and more people need it.
Yes.
And like I said, especially with Nikki's brought this up before, it's really hard for millennials to qualify for a mortgage now. With the stress test, not only that, but in some cases, it's tough to find the down payment. That's the main thing. So they're getting the down payment, more and more people getting it gifted.
Yes,
so how do you get it gifted? Well, with your grandfather or even your parents, they have all that equity in their house. Let's give it to their kids now to get in a house, and away we go on it.
Absolutely. Well, I really appreciate you being here and explaining this to us. I think that you did a very good job of making it, so that it's easy to understand. And I think the main reason I wanted to do this was just so that people understand that the product exists.
Yes.
And it's not what a lot of people think it is.
It is. It
has a benefit for many people and for many reasons. So if you have any questions or would like to learn more, you can definitely contact me. Again, it's Nikki Pike with the Mortgage Group at 403-391-2053. And I'd like to thank Tim for taking the time to come and sit down.
Appreciate that.
Thanks for watching.
Take care.